Good morning, everybody. It is Monday, May 19th, and we're going to get started on our prep today for the ES, NQ, gold, and oil. First, before we do get started, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, we'll start off reviewing what we posted on Friday for our subscribers. We laid out the levels and we missed the low of the day on the ES by about 2 ticks and the high of the day by 5 points. And then we closed right back at our 46.75. So we have a very good understanding of where the positioning is and how that's going to play out. But if you're still trying to make money in the markets by someone giving you a pattern to follow, one that may work for a week or a month and then all of a sudden fails each time the next month, or if you're following the conflicting narratives of the market moving to all-time highs and the phone for trade deals ringing off the hook, or the market is going to crash due to the credit downgrade and go all in on crypto, we're going to review the positioning instead today, and we're going to see exactly what is happening because that can't be faked. And we always pay attention to this positioning so that we know where the bigger edges are. So in terms of commercials on the S&P, we can see where they bought, where they started to go long, and they are still net long. They did sell a little bit, and then they bought into last week before the end of the week. And we can see their position looking at it here. This is the position that's been built. So commercials in terms of our COT report are between 57.15 and 52.40. These are the key areas, and you can see that their distribution has been at the high end, and that's what they're looking for. And remember, they have big pockets, so they can withstand this, and these positions take weeks and months. Again, if we look back to the positioning, these can take quite a while. Now we go back to 2023 and we topped in July, and then they started selling before the market topped, and then we kept going down. Then we built a short position, and that sustained for a while as the market rallied. But really, we went sideways basically from October to February. And then on the down move is when they covered into April. So we watch these closely. And if we look at where we're positioned now, we do have a position to distribute. Again, there's plenty of room to go down. SRW was a good long, went from about 500 to 540, so almost 10%. We laid that one out last week. Commercials are still long. Bitcoin, again, we've been net long the last few weeks as we've made a push from 90,000 over 104. So this is where we felt follow and focus. Where is the commercial side positioned? And we check this regularly. Now, on to credit spreads. Nothing much has changed here, but we'll see what happens in the coming days if the downgrade will lead to a tightening of these spreads. Otherwise, this is signaling no recessionary signals and not much really to worry about overall. Bond volatility. We laid out for you last week on Wednesday. Wednesday and Thursday, we'll show here that we have the area where bond volatility typically has been breaking out. We laid this out on our video on Wednesday. And now today we're getting that volatility to break out. So did we need to know what the catalyst was going to be, or did we need to know that it was going to be a credit downgrade on the US? No, we can follow the positioning and follow what volatility is doing to understand that now we're seeing that breakout today. So this will be reflected in our charts tomorrow as we're seeing that breakout in the yields and the bond prices that therefore shifting as well. So we're looking for a higher volatility in the bond market. And again, if you follow this positioning, you can really build out a true edge in the market because positioning and flows are what really matter. We told you last week as well that 17 to 1629 was key on the VIX, as that's the breakout in February and March. And again, VIX came right down there and then opening gap up today at 1950. So why did this happen? Business cycles. Do you understand the business side of the market and what is really occurring? Once you do, you can cut through all the narratives and stop chasing patterns or results, and you can cut through the noise and understand what the next move is, regardless of the catalyst. So we came down right to where volatility broke out right at the end of a business cycle. And now that that need to paint the tape is done and make the books look good is over, now we can see the volatility begin to return. We also told you last week that CPI would be a non-event on our video last week, and that is what we saw. Now, this week, we will see the downward pressure into Trump's speeches, but we don't really have any other catalysts on deck. So we have to watch any changes to the calendar. There's nothing major this week. So pay attention to whether you use Forex Factory, Financial Juice, or another news service. If we start to see things added to the calendar. So today we have Trump at 10 o'clock and again at 3 o'clock. And we'll also be watching for any signs of Bessent coming with trade deals or Navarro. We want to know when those are coming, if we can, because we follow this positioning throughout the day and we see when traders start buying the insurance, because whether or not we see it on our calendars, somebody somewhere knows something. And if you can follow that positioning, then you can follow that insurance washing machine. If we don't get that, then that opens the door to downside or events to really be non-events and just large chop. And we've gone over this many times. So if you're unfamiliar with that, the way that business works, go back to some of our older videos. Systematics and algorithmic strategies, again, they're going to be on the sidelines for the next 4 to 6 weeks now. So nothing much has changed here, and we won't really focus on this very much over the coming days. Now on to our levels for today. And we'll start with the ES, as we always do. We are looking for rotational price action from 59.02 half to 59.70 3/4, and our pivot is at 59.34. If we happen to make a move up on anything Trump says over 73/4, our target is 6,004. Otherwise, breaking 02 half, we look for 58.68 and 58.47 half. Our line in the sand, this horizontal line here is at 58.39 3/4. That is our major line in the sand where the business in the market changes. So that is still below our lowest expectations of the day. So unless we really see the VIX get back over 21.5 or 22, we won't see that range expansion to bring us down there. Some other key levels for you today on the VIX or on the ES are going to be 59.53 3/4, 59.20, 58.85 1/4, and 58.50 half. Now onto the NASDAQ. For those that like a little more volatility, again, we are well over our line in the sand. We're looking for rotational price action from 21,502 3/4 to 21,202. And our pivot is at 21,349. So right now we're at 21,175, which puts us below our rotational low. So we start to look for a downside move, which puts us down to 21,051 or 20,961. And our line in the sand is at 20,663. Some other key levels on the NQ today will be 21,194 half, which is just above where we are now, 21,019 and 20,851 if we do see a range expansion in the Vixen breaking out. And on to crude. So we've mentioned this several times that 55 is going to be our key for any downside back down to 48. As long as that holds, we're between 55 and 64 on a big picture. For today on crude, we're looking for rotational from 62.99 to 61.35 with our mid-level and our pivot there at 62.09. Our upper targets, if we do get over 62.99, are 63.80 and 64.30, and our lower targets are 60.53 and 60.04. Now, other key levels for you on CL today are going to be 62.58, 60.83, and if we get range expansion, 59.77 on the downside. And lastly, into gold. And so if we look at gold here, we are looking for rotational price action, 32.51, 31.79 half with our pivot at 32.14.4. And we are still consolidating, but we saw the breakout on the credit downgrade. But really, we follow our expectations and ranges. And you can see a few days ago, we came right down to our lower end, right down to our green buy area. And then the market held, holding the rotational zone. So then we look for the rotational high. Our upper targets, if we do break out, are going to be 32.87 to 3309.3. And some other key levels for you today: 3274.9, 3264, 3209.8, and 3198.7 on the downside. And remember, guys, first and foremost, control your risk. That's the only thing we can control in this. And the one thing that will allow you to stay in this game long enough to correct your errors and turn this into a long-term profitable solution. So that is what we have for today for you guys. We will be around tomorrow. We'll have a live prep, and then that'll be about it for the week. We have some things with our students and some time away. But if you are a subscriber and there's any charts you would like levels on, please post in our room, and we'd be happy to get those to you. Have a great day, everybody.